We had a funeral for easy money in 2022. Guys, welcome to the weekend update. Thanks for playing along in the intro there. The reality is easy money is no longer alive, but the smart money and the people that are investing and intentional are alive, well, and they're out evolving the competition. Right now, we're seeing everything from AI to enhanced CRMs to search tools, really enhancing the way we dominate or fall behind in our particular marketplace. And I think it starts with what you're focused on. Are you focused on the problem or are you focused on the solution? Quick call yesterday, recapping a challenge that we were having. We wanted 1 minute on the challenge, 30 seconds on the solution, and then go. I want to show you a report that I linked to down below. It is a big challenge that many of you are having in addition to inventory stacking up, which is actually listed as a problem here. I want to point out the journey of a buyer's cancellation. In fact, let me start with actually the numbers. So if we look at the numbers, we've got cancellations on active residential real estate contracts at almost 15%. So 15% of buyers getting into contract are canceling. That number is higher than any other time since 2017. So we're talking pre-pandemic, and the levels are staggering. June of 2025 was the highest number we've seen of late. 57,000 homes got into contract and then fell out. Let's talk about the reasons why a little bit. And this is what I'm going to focus on. I'm going to talk about the cancellation challenge that we're having, meaning we're not really solving the problems of today's buyers or being realistic with today's sellers. I'm going to get into Mr. Smart Money on the mortgage coach tool that you can see on the right-hand side. I'll talk about this week's featured property from Crystal Jocelyn, and then wish you all a great weekend. If we look at the why people are failing to see through their contracts, right? Let's look at it here. Number one, rates and rate volatility and economic uncertainty. Click on Mr. Smart Money. Take a look at what Mr. Smart Money would do to not just do a temporary buy down, but pay slightly more for a home and get a long-term buy down that meets their needs in a few ways. You've got lower payment, lower overall interest paid, and the ability, if you're comfortable with the payment without the credit, to pay slightly more per month. Guys, if you look at the numbers on a 30-year fixed loan in this scenario, a buyer will pay less than $7,000 in principal in their first year, but pay close to $40,000 in interest on a 6% 30-year fixed. Imagine if they paid slightly more per month because they're okay with the list price, but got a better interest rate and increase their principal reduction in the first year by more than 24%. That's what Mr. Smart Money would do, and this is what we're teaching our clients. So when it comes to mortgage rate volatility, we're not wasting time, we're not gambling, we're negotiating credits to do a long-term buy down, which also means there's not a need to refinance. There's not the urgency to refinance quickly or the uncertainty that what happens if my temporary buy down runs out. Economic uncertainty. Here's the truth. As the economy weakens, the interest rates will improve. So if we start to see interest rates go down, a lot of that is going to be because we're already seeing weakness in the economy. Now, super smart guy, kind of creepy picture, but click on the YouTube link above. I'm running back the YouTube from a few weeks ago because I think it's that important about how sellers are addressing affordability needs to get committed, qualified buyers. Watch the video above that from All Things Financial. If you want to be almost scared straight about what's happening with the Treasury Department and how there is quantitative easing, something we got during the Great Recession. It's actually happening now, yet rates are north of 6% during the Great Recession. And when we did the quantitative easing that we all talked about and knew, rates fell far below that. So there are things that are happening right now to keep rates lower than they would be without them. That's the Treasury Department buying bonds. When the Treasury Department is either printing money or the Fed is printing money and the Treasury Department's buying bonds, That's quantitative easing. I don't care what you call it. That's keeping rates lower than what they probably would be without it. So rate uncertainty and economic uncertainty is certainly part of it. Increased ancillary costs and inspections and appraisal issues. Now, again, this is doing our diligence or our proper preparation up front. Quote from the Navy SEALs, and hey, we're in a town of San Diego where we have some of the highest reverence and respect for our SEALs because they train here. But you do not rise to the occasion. You sink to the level of your training. And if we properly educate and train our buyers on what the proper tax amount is going to be, what the estimate of hazard insurance is going to be, any unforeseen or expected changes in HOA costs, we're going to suck away and remove some of the surprises associated with ancillary costs. Same thing with inspections. If we're doing our diligence, and I know so many of you guys do a great job of getting the proper amount of inspections needed to keep your buyers comfortable moving forward. But appraisal issues is not something we're seeing as much right now. That's why in the Mr. Smart Money, we're okay with paying slightly more than list price for the house and getting a bigger return. In terms of inspections, if you have a seller that knows they haven't done the proper maintenance, aka deferred maintenance, it will come up in the inspection. The buyer will ask for it so they can accomplish some of their affordability needs and remove some of the uncertainty that's stopping them from going forward with the transaction in the first place. Finally, the rise and fall. Again, I said it somewhat earlier, but if we're talking about rising housing inventory, that means more options, which is good. And maybe someone wants to move from the contract they're in to a house they like more. But the rising inventory is why we're seeing better opportunities to get seller credits. It's why we're able to offer low long-term fixed rates or lower long-term fixed rates to clients, saving them interest over time and allowing them to accelerate their equity position, which is something a 30-year fix does not do naturally. See the all-in-one loan resource if you want an alternative to a 30-year fixed. And the rise of housing inventory and the sinking or falling of consumer sentiment. We've been very fortunate that consumer sentiment has remained relatively high in the face of higher prices, inflation, and economic uncertainty as it relates to jobs. The recent jobs reports, aka last week, were so poor that it sparked the run on interest rates we're seeing today. So again, when economic news is not good, rates get better. It's an inverse relationship. So guys, at the end of the day, if we're doing the proper things to prepare our clients, and that means our buyers and our sellers, and we're properly educating ourselves for what's going on in the market, we can help address problems with real solutions. Finally, take a look at the Mortgage Coach. Again, this is Mr. Smart Money. All you need to do is click on the presentation. The link is over to the right. There's a cool JPEG there, and it's going to show you how Mr. Smart Money could buy a house for $700,000, which is what it's listed for, or he could buy a house for $707,000, get 2% and fare much better. And I do this scenario both in 20% down or 15% down. I can do this individually for your clients, and I can also prepare this for your sellers so they can see what buyers will be looking at and assessing when they want to get into contract and stay in contract. Finally, one of my favorite humans, Crystal Jocelyn, beautiful property in her farm area in Carlsbad. Check out this link here. Again, if you want a property featured in the weekend update, all you got to do is let me know, but you'll get a spotlight like this. And if you want to share this link directly with any of your clients, or you just want to know more about a great piece of inventory that just went onto the market, please check that out and hit up Crystal Jocelyn if you have any questions. Now, let me go back here. I appreciate you guys for watching. I always try to go short, but I want to go long enough to where I can help you solve the problems, challenges, and barriers to entry for your sellers, for your clients, for your families, because I know you love what you do. But you do it to make a living and provide for the ones you love. Have a wonderful weekend. I'm off to dinner. I will see you next week.